Hello there. Welcome, everyone. Thanks for joining us. We're so excited to have you here, and we hope you've been enjoying the first 2 days of Boston FinTech Week. I'm Kelly Fryer, Executive Director of FinTech Sandbox, and I'm so excited, so excited for this fireside chat, and you should be too. I have with me FinTech and venture capital legend, Mark Casady, right? Mark Casady, co-founder and general partner of Vestigos Ventures. Hi, Mark.
Kelly, it's great to see you. Thanks so much for doing this. It's been a really wonderful program so far. I've really enjoyed it.
I'm glad that you have. Yeah, I was going to say, actually, I know you've been so active today on the sessions and hopping into the chats. What have you enjoyed the most so far?
Well, it's always fun just to see people gather right on the topic and just get it out there, tell the story and show what they know. And it's just always such an impressive group of people. And I think this year's panelists are particularly strong on the topic areas they've been covering and their insights. And I think they've been willing to share. Sometimes you worry that, you go to an event and people are like telling you a story you've heard 1,000 times and that you're not really getting insights. And everyone I've tuned into, I've walked away with an insight, which is very much appreciated.
Yeah, I would agree with you. I think too, some of the topics we have this year, folks are just getting passionate about it, and it creates a little bit more open and honesty, which we love to see.
Yeah, I always think that one of the most difficult things in the world is what I always describe as inner space, right? Like knowing my bias, knowing my history, and then realize that I have to overcome that in my own unique way, right? As somebody else might in their unique way. And so what resonated with me, with people with very different experiences, obviously at a different point in their lives than I am, recognizing that in a very real way, which is very nice.
Yeah, inner space. I like that. I'm going to use that.
Yeah, I've always said, people always ask me the question, how do you overcome bias, or how do you think about, like, how do you become a better manager? And I always say, study yourself first.
Yep, know thyself. I love it. Well, Mark, I have a number of questions for you, but obviously this session is also about the folks at home learning more about Mark and taking away nuggets for themselves. So please, everybody, jump into the Q&A section to post your questions. Make sure that you're engaged with the chat. I'll weave some of those questions into the conversation and definitely leave time at the end for Mark to answer the rest of them. Mark, I want to start first with, obviously, you've had such an incredible career. And so I wanted to start with a bit of an origin story, especially for those watching who don't know your story. So take us back a bit to how you got started in financial services and ultimately FinTech in the first place.
Yeah, happy to do that. So I started a long time ago, nearly 40 years, I'm embarrassed to say, coming out of Indiana University, thinking that I wanted to manage money. And so that's what led me into financial services, was the idea of markets and how they operated, and do I buy this stock and sell that stock? Just completely fascinating to me back then, fascinating to me today. And I thought, okay, I'll just go be a portfolio manager working with wealthy people, and that'll be interesting. And it was in the first couple of years. And then I realized pretty quickly, Kelly, that I couldn't change the companies that I was investing in. I could only buy their stock or sell their stock, but no effect to them otherwise. And I realized that wasn't for me. So I then went into a management track in financial services, in which technology was a key part of every organization I worked in. And just a key part of this, story of the last 40 years is the application of technology to really democratize financial services. We're not there yet, but we've made, good strides over the years in terms of really thinking about how to help, bring financial services to everyone who needs it. And so that theme of technology is what led me to think about my next chapter of life after I was done operating companies, where I was, chairman and CEO of LPL on my sort of last gig, and that's what
small gig
that it was, gig that it was, and then said, okay, I want to still stay within the industry because there's so much great change going on, but want to do it in this application of technology to the industry.
Gotcha. Yeah, I think you brought up such a good point of kind of, okay, learn that that's not quite something that I wanted to do, and then shift gears into something else. I think sometimes career is a little bit about figuring out what you don't like and then trying on something new instead.
It's so true, Kelly. It's exactly that. As I said, I rarely know what it is I want to do. I almost always know what I don't want to do. Right?
Yeah, call it running from something, not running towards something.
That's okay.
Well, after 15 years of being CEO and chairman of LPL, What were some of your big kind of lessons learned from that experience?
Yeah, I think one of the big lessons, I would describe myself as relatively thin-skinned, meaning that things bother me, and I tend to kind of have it all out there in terms of my own emotions, and I've had to learn in that role where you're always being examined and so forth, that it really isn't about you, right? It's really about the role, and it's about the circumstance, and what really matters is not that you had a setback or you had a bad day, because I had plenty of those, but that effectively what you did about it mattered, right? It's the classic saying that goes around of it's not that you got knocked over, it's that you got up, right? That matters, and persevered. So perseverance was a big lesson for me in that role, and I did need to learn how to toughen up a bit in that time where I had to understand what are the facts that lead to this situation, and then how do we change that situation to bring effective change. I think the other thing I learned is that the sort of reason I went to work every day was for two reasons. One is that I wanted to see someone really achieve something they couldn't imagine doing, right? And it could be a skill. Like I had an executive who was very senior in the company, and she did not like to give presentations at all. I was very unhappy about that idea, and so I, basically made her do it as the head of technology, and she turned out to be, of course, fantastic at it, and because she, of course, practiced like 1,000 times before she got on stage. But there after she got used to it, she was nice enough to come back and say, "I never thought I could do that. You forced me to, and I can." I just love to watch people have personal growth that way. Second thing is I love to think about what new things can we create in the world. In LPL's case, it's a bigger company. Obviously, startups are creation every day of new jobs. And my happiest day would be to go meet someone who's working at LPL and say, "What do you do?" And they'd tell me about something that basically we created in strategy and approved at the board level like 2 years ago, and now we're hiring people to do it. Or we won a piece of business that allowed us to do that hiring. That job creation is really very exciting for me. So those are some of the lessons I walked away with, or reinforced some of the beliefs that I had.
That's interesting. It sounds like personal development or watching others develop is a really important and I'd say passionate thing for you. Has that always been the case? Is that something you feel like is kind of part of who you are as a person, that now you bring into your work?
Yeah, I think I've always had to be learning something new. I was talking to a friend this morning, in fact, and they're having to shut down a business that is relatively established, and it's obviously not a happy day for this friend of mine. And I've known them for 25 years probably. And I said to them, I do have this little piece of china that has on it a quote from Mario Andretti, the famous race car driver, that says, "If you don't hit a wall once in a while, you're not going fast enough." Right? So think about it in this way: are you not taking risks? And sometimes those risks are going to pay off, and sometimes those risks are not going to pay off. And so that, to me, is the embodiment of learning. I'm trying new things. Some of those things, fit comfortably, like this, sweater does, and other things don't fit so comfortably. But I've learned something as a result of those things. So learning has really been critically important to me my entire career. It really amped up about 10 years into my career when once I'd sort of gotten my footing. As we were laughing about before, the things I wanted to stop doing and the things I wanted to spend more time doing.
Nice. I love that. And then, so how did you make the jump from, okay, I'm at LPL, but now I want to get into venture and ultimately creating Vestigo?
Yeah, so the first part of it was this excitement about financial services. We are at the most interesting time I've seen in 40 years. So that's saying something right there. And the reason is because of these incredible technologies, blockchain, DeFi, as an aggregate of some of that, artificial intelligence, machine learning, they're all coming to bear. And the general digitalization, never can say that well,
I know,
of the industry and financial services will be as impactful to this industry as it was in media, music, and the others that are better known. It'll happen very differently than it happened in those industries. There, you created a competing direct to the consumer model, and it overtook the incumbents. Here, the incumbents will have to incorporate a lot of those lessons, right? And that's they'll be successful at doing so. Not all of them, but some of them. And that's what will be different. So for me, it's number one, the excitement of looking at all this change and what's going to happen. And really being there to help startups connect to those organizations through our VC activities in order to help bring that change. So that was first reason. Second reason is I wanted to give back, and I didn't quite we have a foundation. I don't mean to highlight that in the wrong way, but we've given back in the classic way one should give back, I think. But giving back in a form that says we're going to help entrepreneurs, with funding, with insight, with connection, to me was a really great goal and a very capitalistic solution to the problem of equality, to the problem of diversity, a lot of other issues that need to be addressed within financial services. So I also looked at it in terms of what's the social good that can be had, by doing this. And the third is I don't like to do things in a small way, right? Meaning that if we're going to do it, let's do it right. Let's form a firm. Let's have a culture. Let's make this multiple funds, and let's create a real investment capability that survives long past the time that I'll probably be active. And that was sort of the third component for me. And I'm really pleased with where we are 5 or 6 years into it.
As you should be. I like the idea of, if we're going to do it, let's really go for this and make a change. Why not?
Yeah.
I think the other important
you're doing at Sandbox, it's the same thing.
Well, that's what I was going to say. The other important point that you brought up is, starting at that entrepreneur level, we talk a lot about at FinTech Sandbox and the ripple effects it can have on social change, on financial change, on just technological change. So very similar idea. And I completely agree with, that's a good area to start with to make that impact.
Yeah, absolutely.
Well, I'm curious, and I think you touched on it a little bit, but why early stage fintech versus either investing in more mature companies or going even into a different sector or area? What made you pick early stage?
Yeah, so fintech, clear enough, right? My background's so heavily financial services, got to do that. And I would say that 6 or 7 years ago, you could see this wave coming that we're now experiencing in fintech. So much excitement about it. I wouldn't say that I thought the wave would be as big as it is, but you
I don't know if any of us did.
Right? But you can see the beginnings of it, then. So that part I would say was sort of obvious enough. But early stage, because it's the place you can get the greatest return for your investors, it's the most likely to produce a really good return for investors. If you get to be good about identifying companies early on, that are going to do well, of course. And then the second component of it is that the network. So we built a team that are very connected to the banking, insurance, asset management, retail, advice distribution, worlds of incumbents. And that team could really help a startup with the leads they need, for sales or for creating, beta clients or whatever else they need. So we wanted to exploit our network. Whereas if you're doing like C-level investing or D-level, it's really a lot more about financial engineering. And it's a lot more about, just analyzing, financially the dynamic of a company. It's less about, core company building.
Yep, a little bit of a different kind of structure, even or focus in terms
really
of what stage you're at.
And great and wonderful that it's there and lots of good capital there. Don't want to take anything away from it, but I knew it wasn't for me, and I knew it wasn't for the firm that we wanted to build.
Yeah. Vestigo obviously has a uniquely kind of data-driven approach to focusing on fintechs who will change the future of the industry and these kind of emerging technologies. Can you explain Vestigo's investment thesis and how that came to be your approach, kind of the decision process?
Yeah, I'd be happy to. So over the years, a good friend of mine, Dave London, who's the other general partner at Vestigo Ventures, set up his own venture firm, Link Ventures, that allowed him to really create data to understand what was happening as the world digitized and customer acquisition. So I'm old enough to have grown up when the only advertising you could do, right, was television and radio. How exciting is that? And of course, today all of this is switched online, and so the biggest source of lead generation is, of course, the internet. And Dave saw that early on and built Kogo Labs, which is a collection of data of consumer searches and consumer emails with all the personal data taken out that allows us to see trends. And I've worked with him with that data for probably 15 years and helped him with some of the companies that he was doing at Link back in the day. So when we went to set up Vestigo, I said, well, I want access to that same data.
Yeah.
So I'd like to be able to find fintechs within it. And much to the credit of Fraser Anderson and a number of great interns from WPI in particular, we've been able to actually do that. 3 of the companies in Fund 1 were discovered in the data, at their seed or before their seed stage. and they were going viral. And so that's unusual. You don't find many organizations that can do that. And then we also use it to do diligence for companies that come to us in the more, if you will, the normal way. So if you send us a fintech, we're still going to run it through the data because we can see its competitive set and we can see how it's doing in customer acquisition, whether it's B2B or B2C. So it is an unusual capability. We've added outside data sources like SimilarWeb, and of course we have PitchBook like every VC does. And that together we think forms a unique set of data for us to understand and interpret. All that is to serve two purposes when we think about startups and we think about the industry. What the industry's got to do is take its cost structure down. It is much too expensive to bank, to invest, to get insurance. So that's one theme. And the second theme is that we just are not very good in financial services at delighting clients, right? We try to confuse them. Here's the newsflash. Shocker. And so, we basically, create words that aren't real words to talk about things. And oh my gosh, we add a ton of complexity. And then we know that just the technological, work is really not very well thought of. Super low NPS scores versus technology companies. So those two themes drive a lot of our work when we talk to startups about what they're doing, how they're doing it, and then the data allows us to validate, whether our thesis is correct and whether the startup, seems to be getting to the correct thesis.
Yeah, that was so interesting. I have so many sub questions off of that one answer. I'm curious, the previous session, the Raising the Bar session, talked a lot about transparency in financial services, and some of what you just said, that's not really how financial services is built. It's built to confuse folks a bit, and then it creates a lot of inaccessibility, essentially. So I'm curious, as you're assessing startups in the space, how do you consider that kind of transparency, or to your point, making it clear to the end user, not confusing them just to confuse them?
Well, it is a very difficult thing, and I must admit, through my career, there's times that I thought adding more, obfuscation was a good idea. So I'm a convert, I have to admit. But so I worked, for example, with the SEC on trying to shorten prospectuses and make them in the English language, which of course went nowhere after about 2 years worth of work. And so it is just better that consumers know what it is they're buying. Then you stand on the principles of, is this a product that fits for me? Is this a solution that makes sense, or it doesn't? Because I can understand it. They don't have to be experts in asset allocation or how insurance works, but everyone has common sense. And if you apply common sense with the right information, you're likely going to come to the right answer. So we're looking for ways in startups to make that clarity of information, or the level playing field between either the consumer or even a business that's buying financial products, helps them. And so it could be something that's doing research work or doing things that allows them to to provide just cleaner or clearer information. Most of our startups have been enterprise SaaS that are really focused on lowering cost, which to me is a form of making things simpler, right? So if you can suddenly have an insurance product where you've taken out a lot of cost because of the technology you've applied, that's only going to make it more accessible because you've lowered the price on it, for the consumer. So that's the other aspect of trying to get to clarity or transparency in these things.
No, I think that's such a great point, that the back end, sometimes updating the back end can create just as much accessibility and just as much access as focusing on the user experience and the actual design of the product.
Yeah, I think if you think, I was going to grab my phone, but I don't know where to put it. Is that you think about mobile phones, right? For me, I've loved a laptop for most of my life. I'm embarrassed to admit that in college we didn't have computers, right? So those came into the work world for me, which even my children can't believe is true. And so the reality is that I want to do things on my mobile app, and in fact, I'd really be happier if I could text, right? That we know that's the way consumers want to interact. And yet, as an industry, we've really avoided it. LPL Financial was one of the first places that worked with the regulators to allow for social media postings by financial advisors. A big deal to be able to be on Facebook and Twitter and some of the early entrants in that space. Texting was not allowed until really just about 5 years ago, which is almost impossible to believe, right? Even though the consumer wants to do that. So again, a lot of our technologies and startups are about enabling on a compliant basis, those activities, and making them as efficient as they can be. So that's a really important part of what we try to look for.
Yeah.
Looks like we have a couple of questions that came.
We do have a couple of questions. Let's dive into those. So what have you learned as a VC that you didn't know before you started Vestigo?
So much, so much. So we have a process at Vestigos of sitting down about almost every quarter. It's not quite every quarter, and asking each other, what did we learn this quarter, right? Like what were the new findings? So we try to have a systematic process of sharing learning across the group and recognizing that we can't know everything, right? And therefore the learning is what's important. And so I think what I did is I interviewed a number of VC firms before we set up Vestigo, asked them for their best lessons, and there are two that I took away. One is a little obvious, which is it's all about the founders. And I would only say that I knew that going into it, but boy, is that reinforced, almost 6 years later, that it's all about the founders, their perseverance, their passion, right? Their drive really, really does matter. And then secondly is pattern recognition. And one VC said it this way, which is, Mark, you're an operator, so you're going to look at 100 business plans and you're going to like 10 of them because you can look at that business and think about how to improve them. But that's not your job. Your job is to have a team that, builds that business and takes it forward, and you're providing the capital and contacts and insight where you can. And they said when you get to 500 business plans you've looked at, you'll like one. And so believe it or not, our ratio is we looked at 1,200 businesses to get to the 20 that are in Fund 1. And so we feel like, okay, we're somewhere in that zone, maybe not one for 500, but at least understanding how precious it is to think about a business and what it does. And I think that was news to me that would actually happen that way. But after a while, you do really get a pattern recognition of the team's ability and what the business is trying to do. And then pretty quickly what you want to dig into more and what you don't want to. The other thing is, you tend to be skeptical when you have 40 years of experience in an industry, and you have to be really careful about that. And so if you'd asked me when I was at LPL, would something like a robo advisor, right, a low cost advisor, would that work? And I'd say it might, but I'm skeptical about it. And we actually tried one at LPL before the term robo came along. And it was wildly unsuccessful, I must admit. And so there's certain things I would just be an automatic skeptic of. And what I've tried to do at Vestigos, particularly in the last 2 years, is make myself believe, right? Like listen to one of the other partners or listen to the entrepreneur and just suspend disbelief about that idea and open up to what it is that they're seeing. And then I at least feel like, okay, I'm hearing what it is that the entrepreneur is excited about. And now can I, understand and ask the right question about what's going on in that business dynamic as it grows in order to decide whether this is a good idea or not. So that openness to, not having pattern recognition, if you want to use that, was really important. So those are some of the lessons I've learned. 100 others, but those are some of the key ones.
No, I think you're bringing up some really good points in terms of, suspending disbelief and leaning on your colleagues who are also, what do you see that I'm not seeing? I think sometimes too, we almost get so close to an industry or have a personal experience that makes us a skeptic that you're like, no, I don't think this will work because we've tried something similar. And then someone else is seeing a slightly different perspective on it that's insightful. So, yeah.
It's an interesting industry in that you don't actually have to have a lot of experience in a particular group or business to have a good intuition about a team or about a business model or ask like the right questions about them. And part of that's what's happening in the world at large. Experience is less valuable today than it was 10 years ago or 20 years ago. That you can see everywhere. But in our business, one of the things I had to learn was whether you're 25 years old or whether you're 60 years old, the reality is you have a set of experiences that informs you. And if you're particularly good at a certain way of questioning or interacting with entrepreneurs, that's going to give you a real advantage in ultimately investing. And so you've got to be respectful of that, right? You can't defer to the fact that I've got 40 years of experience. It's nice if you do, but that isn't going to get us where we need to get to, which is creating a really great portfolio.
Yeah. We have a question in here that I also had a pretty similar one, which is there a segment of financial services you think is most ripe for improvement right now and needs, some more technology and attention focused on it?
Yeah, there's so much to do. We're just at the very beginning stages. So I'll just hit a few examples. Most of them are what I would describe as deep operations issues. We know the banking systems that the banks use are antiquated, don't work right, often fail. All the great things you like about a system, just are not coming true. So there's just an enormous amount of investment that needs to go on in the banking sector. And the way most startups try to do it is solve for a particular problem within a body of operations, right? And then expand out, land and expand. And that can be a very good way to do it. So there's just a whole range of things in operational improvement across the entire industry, insurance, banking, asset management, and the like. There's a lot of work to do in compliance to make it more cost effective. That again really evolves around automation and particularly using AI in both the operational case and compliance. So we're big believers that sort of deep technology or deep problems are the ones to solve and we're most excited by. And they're really hard because you've got to find a combination of somebody who understands the problem and is entrepreneurial. And that's
and can sell it.
right, exactly. So it's a little bit of both, that's there. There's certainly areas that we see that relate to the way consumers, build trust, with a brand. And there was a panel earlier today that spoke about, the fees that banks have. We have a company called Cushion that basically helps consumers get a rebate on those fees. They've returned millions, I think over $10 million now to consumers. Well, if you do that, you suddenly have trust, right, from that consumer. So there's an awful lot more to do about just basic cost that can be that direct. Let me remove that fee for you. Let me negotiate with the bank or the insurance company on some behalf, that still needs to be done. There's an awful lot of that to go on. And then I think the third area for me is around taking, DeFi is at a really interesting point. So we can find, the use of blockchain for securitization, right? So I've owned shares of IBM, just to use a name of a public company. And I today do all that through an antiquated settlement system. And everyone talks about, well, we're just going to go replace that settlement system. Yeah, you're not. It's going to take you like 10 years to do it. What you can do, though, is start to create the pieces of a puzzle or the pieces of a Lego block, whatever you'd like to use as your analogy, and start to bring together those capabilities in new ways. And so a new way to do it would be to be able to do fractional shares of IBM on the blockchain, super inexpensive, easy to do technologically, and would create an ability for someone to own a portfolio that's diversified, and yet at very small sizes. And that needs to be done in the industry to provide more access and provide better diversification of assets. And there's a lot to go in that whole DeFi blockchain space.
Is there any area besides the ones that you just mentioned that you look at your portfolio and you're like, oh man, I wish I had an investment in this technology or an investment in this focus area?
Yeah, you tend to do that every day.
I know.
This is one of the things you have a lot of moments. So we every summer ask our summer interns to go back in time. We keep all of the contacts we've had with startups in a CRM. And they go back and just review them by going to PitchBook and just going to their website. And a lot of them, of course, shut down in that time. And we look for the ones that we missed, right? That we talked to, met with the entrepreneur, and then turned them down. And we can definitely find a few that we wish we would have invested in, that are there. And that's not unusual for the business. But in the end, what we feel good about is we've created a very diversified portfolio. It's a little. Some people even call it eclectic. I've got pet wellness, pet insurance in one place. We've got, Roots Automation, in another place that does bots for insurance companies. We've got Cushion, as we mentioned before, Long Game that does gamification of savings for, the banking and credit union community. So it's a pretty wide mix. And we like that mix because we think that gives us diversification across the group. And it allows us to really look broadly in what one might call FinTech. We have avoided payments for the most part as a firm because there are some very good investors already in payments. And so it allows, they should be the ones who really have that expertise and do what they do. And we should, be doing kind of everything else.
Yeah. We have an audience question that I want to weave in here from Kristen, who asks, Mark, you talk a lot about wanting to do good. How do you decide where to point your attention and your investment, and when there are so many good options out there for trying to change the world?
It's hard. It's really hard. It's the worst day is when you enjoy the entrepreneur's company and you kind of like the idea, but it's not quite there. And you try to give your best advice to say, if you just did a little more of this, a little more of that, and in some cases that happens, and they come back and we restart a relationship. But we try to do a few things. One is to in the end, our LPs expect us to do the best job with their money, right? To get them the best return. So it's highly competitive to get funding. As I said, we looked at 1,200 companies to get to 20. So that means we see we're basically in the business of saying no, I'm afraid. And what we try to do is understand, is there something, what we're really looking for is somebody who's creating a new market out of an old world. They're not just marginally improving a situation. So we could build a neobank tomorrow together, and we could focus that neobank to a certain sector of clients, and that would be fine. But that's really just marginal improvement, right? But if what we did instead was create free banking off the back of the debit card, and did it in a way that brought together other aspects like saving money and giving advice on how you spend, there's definitely models like that out there. That's creating something new. That's a different experience. And that's what we're looking for. The very best ones out of many that are good are the ones that are going to create a new market where a market doesn't exist today. And that's what we really push ourselves to. Is that going to create a new market? And is it possible for that company to grow to $100 million worth of revenues, or is it not? And that's the other part, is we see a lot of great businesses, but they're going to grow to $10 million, $20 million worth of revenues, which isn't big enough for a VC, unfortunately. And so we'll say to them, look, you're going to have a fine business. You might want to think about more of a bootstrap funding, where you start with friends and family, then maybe you go to angels, and you just try to take as little funding as you can, because that'll create a lovely business for you right over time. And that might be better than trying to go the VC route.
Yeah, that's sometimes I think the tough reality for some entrepreneurs is not every business is meant to be a venture-backed business, and that's okay. There's other sources of funding like angel investing and bootstrap, which Mark's going to talk about angel investing in our next session as well. So join us for that. But there are definitely other options for some entrepreneurs as well.
Absolutely.
Mark, how can fintechs best position themselves for conversations with VCs, kind of speaking in this topic? How can they prepare themselves for that?
Yeah, the best thing they can do is to be very clear about the core idea, and then how the financials work in that business model. So you often meet people who are very articulate, very good at communicating, but they get lost in what the core idea is, or they get lost in how it's going to make a financial return, or it isn't realistic in terms of how they're thinking about the market and how it might grow. So the classic story is, tell me what the business is, tell me how big the addressable market is, the TAM, right? And then tell me what your financials look like, and then tell me what financing you need to make that work. Those are kind of the four basic things you're looking for in any business plan. The ones that come across the best are the ones that do that in as simple a format as possible. Doesn't mean it has to be only 10 pages or whatever, but it does mean that they simplify the idea to something to a point where it's very easy to grasp what you're trying to do, and very easy to grasp why this team is particularly well aligned to do it.
Yeah, I talk a lot about the grandma test. Would somebody's grandma understand your pitch if you did it to them? Would they be able to repeat back to you what that business does? And if you can get to that point, then it's your pitch is looking pretty good.
That is really great advice. Absolutely.
Mark, the theme for Boston FinTech Week is obviously financial services for anyone, anytime, anywhere. What do you think is still missing from FinTech or financial services to help us really achieve this notion and kind of create a more inclusive financial future for everyone? Big question.
Well, the first problem is actually the who you fund, right? And I sit here as a person who's obviously had a certain background and a certain perspective, but the reality is that if you don't bring diversified views in, however that diversity shows up, it can be Things that are more obvious in terms of diversity can be things that are less obvious in terms of diversity. But I can tell you from 40 years of working with teams, the more diverse the team is in experience around the table, the much better decisions are made, and the much more likely you are to be successful. So I can give you 100 examples at LPL alone where that's the case, and we work really hard towards having diverse views. With startups, the problem is getting funding to diverse leaders of diverse entrepreneurs. And what we said to ourselves very explicitly at Vestigos, I can only speak to our experience, was this is where the inner space comment that we were talking about before comes from. What are our biases? We all have them, right? It's just the nature of it. I went to a big state school, Indiana University, 35,000 people. So to be honest, when I meet someone from an Ivy League school, I immediately go, "Ooh," that's just, and yet when you hear their story, you realize their story isn't much different than my story, right? They might have had a very difficult upbringing and put themselves through school and all those things. And they were super smart, so they got into that school, and so I know that's a bias, and so therefore I have to control against it when I think about things. The joke I used to make with employees was on Mondays I'm like anybody else, I'm a little crabby, right? On Fridays I'm a little overjoyed because it's Friday, and so I have to tone up or tone down, my view of things. So if an entrepreneur pitches on a Monday, they shouldn't experience anything different than if they pitch to me on a Friday. Those are kind of silly examples, but they're examples that are about exploring your own bias and your own way of looking at things. So what we said was we have to think about how we interact with an entrepreneur who's different than we are. And the thing that we all look for is sameness of self, right? You tend to want to look in the mirror when you're looking for someone to hire, you're looking to fund somebody. And so what we said is consciously we have to get rid of that bias. And so as a result, which is that ultimately tells me, are we making progress against that or not? We have the industry has about 15% of their investments are in women-led, women-started companies. We're at 20%, so we need to do a better job there, but we're doing better than the industry. And in minority-led companies, the industry is at about 23%, and we're at 45%. And so we feel like we're making good progress on making sure we're getting the very best team and not using that mirror problem to misfund, if you will, those companies. So that's where it starts. Is that second thing it does is you want to look for business models that are fundamentally making things simpler and cheaper, as we talked about before.
Yep.
And if they do that, what will happen is you'll be able to bring banking to the masses. You'll be able to bring insurance to the masses. You'll be able to bring asset management to the masses. Robo-advisors did an excellent job of that. Really changed the nature of how someone accesses basic portfolio construction. So that to us is a critical part of it, is if they can attack that cost curve and they can attack the customer experience, it will then allow them to be able to expand to other markets. And then we look for obvious places. Credit, for example, is an area just filled with abuse, unfortunately. And so we back two companies in the credit side, one that works with banks and one that works directly with consumers. And what they're looking for is really helping people build, thicker credit files and build better credit outcomes as a result. So you can find specific businesses that really, do bring a much better solution to the market than what might be out there today. And part of how they do that is by avoiding the bias that's in the existing system today.
Absolutely. I mean, I heard just kind of a central theme, I'd say, of intentionality in the work that you're doing, the biases that you bring yourself, but also in terms of the sectors that you're focusing on, how you're looking at companies, what benchmarks you're trying to hit. I think that intentionality becomes so important as we focus on accessibility and inclusion in the space.
No, I appreciate that, and it is that it's you can never be perfect. That's not possible for any human, right? But what we know we can do is we can be better. And I think one of the great things about the U.S., I think one of the great things about the world, I think one of the great things about particularly younger generations is that desire to always be better, than what they might have been the day before. And that to me, if we can just feed more of that spirit of every day I'm improving, right? That's going to be a good thing.
I love that. We had a great question come in from the audience. So obviously we have just had the amazing Boston FinTech success stories and Flywire and then Toast IPOs. Where do you think the market is going in terms of companies, for companies FinTech that are in terms of their valuations and exit opportunities?
Well, I think it continues to be a very robust market. It will be for quite some time. Interest rates are going to have to stay low for a long time. So even if they go from 1 to 1.5 or even 2, it's not going to matter much when it comes to growth companies. If they went from 1% 10-year Fed rate to 5%, that would be a problem for this, for basically fintech investing and for that public market, examples you gave. And because, obviously the lower interest rates are, the more growth is valued, right, in the present time, for those companies. So what we believe is that we're in a very unusual economy where interest rates are going to stay low for quite some time, that you have enough stimulus, from the federal government and from the Federal Reserve's actions for businesses to have a really great backdrop for forming and starting, the startup stage, and also for growing when they're to the level of Toast and some others to be able to go public. And you have a public market that very much wants growth. And we can't forget, I don't know this is the right number, Kelly, but it's got to be close, is there's probably half as many stocks available to trade today than there were when I was a portfolio manager 40 years ago. And it may actually be more dramatic than that, but it's a lot, right? So there's a real hunger on Wall Street and in, let's call it professional portfolios, institutional portfolios, to have access to these high growth companies. And so if we can find a way, let's just say in Boston, to get them while they're early and fund them and help nurture them along, and then have the successes we have in Flywire and Toast, I just see more ahead that are more of the same.
Yeah, I think you're right. Put them on that kind of trajectory and support them along the way. I love that. We're winding down here, only have a few more minutes. And obviously we started the session talking about the importance of learning. So I kind of want to end on that note as well. We had a question about, if I'm earlier in my career and I want to get into fintech entrepreneurship, or I want to get into VC investing, what things should I be thinking about right now? What steps could I be taking now to start to get into that?
Yeah, that's great. Great question. So, the first thing is go to things like Boston FinTech Week, right? Go to the events that you have at the FinTech Sandbox. Go to the Mass Challenge events. Those are fantastic, places for gathering like-minded people. So whenever somebody asks me that question, I say, you've got to go to those three places. Boston FinTech Week is an event, once a year, but, both the other organizations, Mass Challenge and FinTech Sandbox, of course, have ongoing, often monthly events for you to gather, because what you've got to do is find your tribe, right? You've got to find others who are excited by fintech. You've got to find others who are excited by startups, and they're going to live in those places. And then you're going to find some of the subgroups, angel investors. You're going to find, subgroups that are people who are around blockchain and sharing that technology, and others that are there. And the more you can get, connect to those groups, the more likely you're going to find the group that you find most interesting and the startup that's there. Startups are like anybody else, right? They have a tremendous need for people. We have on our website a jobs board that are for all our companies. And so, we're not unusual. Most venture capital firms do the same. So you can certainly look at those job boards that are on our website or others for the startup companies that are there. You don't necessarily have to be a founder, right, of a startup to go work at one. They need all the skills that every company needs, from marketing to sales to engineering, to product management. And that's often a very good way to get started in that world and see if you like it. It may not be for you, but if you go and work at a place for a couple of years and find that the environment's really exciting and challenging and what you want to do, then you can go on to the next one. Or you may decide that you want a different environment. For venture, it is tougher because venture is a small industry. And I think some of the best ways you can do it is take even a small amount of money and get connected to the angel groups and offer your help with just a small check that allows you to get involved. So even if you're in your 20s, you can probably afford to put aside a couple $1,000, right, that you might be willing to invest in a company that's interesting to you. That's not so critical, but what you could do is offer your time. So you don't have to even write a check, but say, hey, I'm willing. I'm fascinated by you as a startup. Let me go and offer my services to you for free. Not 40 hours a week, but for weekends or something, you might do 10 or 20 hours with a startup in order to learn. A VC will then see that, right, and you can then look for a role at a VC again, on the job boards that are out there, and that would allow you to show that you've worked with startups, you've helped them, and you have maybe a good eye for startups that are more interesting than others. So I don't mean to go on and on here, but
No, it's a great answer.
Lots of opportunities, to work in the industry, and I think being at a startup first is really the most helpful aspect of it.
Yeah, gain that experience, try it out for yourself. Well, Mark, if I don't let you go, my team backstage will be very mad at me. So we could talk forever, but I'll go ahead. Mark is going to be headed over to our angel investment education event with Mass FinTech Hub. So please join him over there in the next few minutes if you're interested in learning more about how to become an angel investor. We're so excited to have that session. Mark, thank you so much for joining me today. It was such a pleasure to chat with you and listen to your story as always. I'm going to go ahead and let you hop off and say goodbye here.
Thank you so much. I really appreciate it. Great to spend time together, and thank you for bringing all this together, making it happen. It is amazing to watch.
Of course, we are happy to do it. Okay, bye, Mark. See you soon. Awesome. Well, Mark hops over to the next session. Thank you all for joining us. I hope you had fun today too and heard a few nuggets that you can take back with you and implement into your own work or life. Today was some really heavy hitters. Our team has been watching backstage and getting so pumped up listening to Jimmy Chen and Sally Krawcheck. They're, some of my favorite lines throughout the day have really been, united voice across innovation and community. That's how you start an ecosystem. Culture add, not culture fit. What such a mind-blowing session there with Sally Krawcheck. And the Raising the Bar panel with, it's fear. Is it fear? Is it really being accessible for financial institutions or financial solutions, and the importance of transparency and intentions when it comes to building out your products and creating a more accessible, inclusive financial solutions for all. Today was obviously all about building a sustainable and inclusive tomorrow. But tomorrow we're going to be back here at 9 a.m. Eastern to look at the even greater future of finance. We'll start the day with a really can't miss conversation between Silvio McCallie and Steve Kokinis of Algorand, along with Matt Hatch of EY. Then we'll look at how blockchain is changing the future of capital markets and insurance. And then in the afternoon, we'll have great panels on catalyzing sustainability and the creator economy and payments, and wrap up talking about DeFi and the future of finance. But don't go anywhere yet. Again, if you qualify as an accredited investor, we have a session hosted by Mass FinTech Hub about to begin here in just a couple minutes to teach you about how to become an angel investor. You can find that on the agenda in the community hosted section and switch over to that event next. We also join you to stick around and go hang out in the networking rooms or go check out our startup booths and our sponsor booths again. Meet some new faces. Mark was just talking about the importance of community and finding your tribe and getting to know one another. So definitely utilize the booths and the rooms to meet each other and say hello. So head on over, have a good rest of your evening, and we'll see you all back